Welcome back. You're watching The Money Show on ET. Now it's time for our Spend with TMS segment. Realty is definitely one area that's catching our attention for the most part of the last 2 odd years. And now furthermore, with home loan rates dropping and with many cities cutting their circle rates as well. We have with us Prashant Thakur, Head of Research with ANAROCK Consultants, to talk a bit more on this entire phenomenon. Prashant, thank you so much, for joining us today on ET Now. So Prashant, to start with, what do you mean? Let's start by the more granular topic, and that is the cut in circle rates that a lot of cities now have gone ahead with. More specifically, a more popular market, and that is Delhi, the NCR region. ANAROCK has released a note as well talking about the spike in sales. Do you think that's on account of this cut in circle rates?
First of all, thanks, Lovina, for having me on your show. If you look at the second half of the year, that is, post the lockdown, the real estate has made a very significant comeback, and that is on the back of various factors. Number one is, people were kind of, locked up for quite a long time, and then, they realized that, how important it is to have a physical asset. And government also took some calculated measure. For example, in Maharashtra, the stamp duty cut was introduced. And then, on the same line, the Delhi government has announced a cut in circle rate with a sunset clause. That means, it's a time-bound reduction that they have announced. So in a way, they're trying to encourage the buyers who are looking to buy a property, but were somewhere discouraged by the high prices. So this cut in stamp duty, circle rate that has been announced by Delhi government, which is applicable till June 2021 and applies to properties till the price level till 2 crores. I think it's a good move that will encourage the buyers and also help the developers to bring down the price a little bit. Earlier, there was some apprehension that in most of the micro market, the prices of the property were almost equivalent to the circle rate. And then, selling 20% below the circle rate would have attracted penal income tax from both the buyers as well as the sellers. So I think this is a fantastic move, and I think it will encourage more buyers to come into the market. But there's one caveat. It is, for example, in Delhi, it is not applicable in NCR. So in Delhi, in the primary market, the availability is very low. There are hardly any new launches or, let's say, any new project from a developer. So in my opinion, this would benefit the secondary market or, let's say, investors who are, looking to exit the property. So I think in a nutshell, this will have a limited impact in the primary market, but yes, the secondary market will have this benefit for Delhi market particularly. And for other cities, I think, if other cities like, Bangalore, other cities which are kind of, experiencing good demand and comeback, if they go ahead and announce time-bound reduction in its circle rate, I think that would be a real booster for this sector, which is making a strong comeback.
So, Prashant, when a city cuts its circle rates, it does not necessarily mean that I can expect the developer to maybe cut their real estate prices, is it?
Yeah, not necessarily. But, if you look at the overall pricing environment in the country right now, it's on the softer side. From last, almost 5 to 6 years, the prices have not gone anywhere. And after, government's intervention to revive the sector, people are expecting that the developers should bring down the cost. They have their own set of challenges in bringing down the cost. Number one was that the selling price was almost equivalent to the circle rate, which was prohibiting these developers to do the transaction below the circle rate. As you know, the income tax says that if you sell it below 20% of the circle rate, there will be a penalty tax, income tax that has to be borne by both the buyers and the sellers. So by bringing down the circle rate, I think it will give the buyer and seller both the headrooms to kind of, negotiate for a lower price. But again, if you look at the increasing input cost, for example, the price of steels are going up, and then the way unsold inventory level is coming down, I think sooner or later the price will have, the pressure of upward movement. So I think this time-bound reduction gives a good room for the genuine buyer end user who wants to make the transaction.
Okay. All right, makes sense. We are in an era where home loan rates have dropped to historical lows. I've asked you this question before as well, Prashant, about this being a good time to buy a property. But I want to ask you this question now, not from a person who's going to be consuming the realty, but basically somebody who's going to be living in that house, but for somebody who has maybe some surplus cash. I mean, the markets as well have rallied, right? You never know. There may be people out there who've booked some profits, and now maybe they're looking to park it in realty because they have this investable surplus. Is this a good market to even invest money in, keeping in mind yields in India?
Yeah, I think first of all, as you rightly said, that this is the best time for the end users. Now coming back to the investors, if you look at how real estate should be treated for an investor, is that it provides stability to one's portfolio. Now, if you look at the new launches that are happening, it is more or less led by category A developers who have a good track record of completion. So in my opinion, if you look at the stock market that have kind of, I would say they are in overheated zone, I know a lot of many investors who have booked some partial profit and moved that money into real estate. So in my opinion, if you look at a long-term horizon, if you select a good developer and a good locality, I think it would be a wise move for an investor who wants to kind of rebalance his portfolio during this time where there's a lot of uncertainty. The stock markets are going up, but again, for last couple of sessions, we have seen how the bond yields have spooked the investors. So this is the time where they should transfer their surplus profit to real estate and bring some kind of stability. It's a good diversification tool for long-term investors, in my opinion.
Okay. Correct. Absolutely. Great. Well, we are completely out of time. Prashant, thank you so much. As always, it's a pleasure having you on board with us on The Money Show.
Thank you.
And yes, we are completely out of time. So thank you so much for watching. Stay tuned to ET Now for Startup Central.